Good morning, everybody. It's Monday, October 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 2 at 413 and a quarter. November soybeans were down 7 and a quarter at 980 and a half. And December Chicago wheat was down a half at 568 and a half. This morning, we had a couple of export sales announcements from the USDA. 124,000 metric tons of corn to Japan for 24. Also announced was 120,000 metric tons of corn to unknown destinations, also for 24. We are currently through 19 of 23 settlements for the harvest price discovery period for crop insurance. Corn is currently at 417 and soybeans are at 1009. Good morning, guys. Hope everybody had a nice weekend. We opened pretty weak last night. You got crude down about 450 here this morning, just on some rising tensions there with Israel bombing Iran. Dustin, maybe a few thoughts to kick us off this week as we approach first notice day for November futures, and we'll throw it around the room from there.
Yeah, thanks, Dan. Yeah, we had option expiration for November beans on Friday, which is really kind of the biggest option expiration for the year for beans. And we had a lot of in-the-money puts we talked about through the week. We have first notice day on Thursday, so most of those short contracts will need to be rolled or exited prior to Wednesday the 30th. Other than that, just looking at, pretty good rain in the forecast, river levels really need it. And so a lot of that basin should get a little bit of a reprieve, but that current NOAA forecast for the river is still at like -10 for Memphis for the next couple of weeks. So could be an interesting, kind of finish to harvest and, just kind of get in direction for where we start this week from the market.
Yeah, and I noticed, soybean open interest from Friday, they're down 53,816. So obviously a lot to do with that expiration that you mentioned.
Yeah, I mean, a lot of people might have already pre-covered it, pre-rolled it. We've had some really crazy moves in the soybean spreads. We went from Jan went to 19 and a quarter under within just a very short time frame, couple of weeks. Went all the way into 2 3/4 under. Backed out, back into double digits on Friday. So I think a lot of people are probably, taking this as an opportunity to roll. And then, of course, open interest is going to go down with that option expiration.
Very good. Ben, what's on your mind as we start the week?
Just looking at big week here, I think with first notice day for beans to see how they behave, and stepping back, just looking at a chart of beans, looking at moving averages. We got right up above the 50-day last Thursday. We saw a little more short covering, stopped dead in its tracks, and had a pretty poor close to the week. Looking at, people that like the moving average trade, they look at shorter term indicators crossing longer term indicators, and it looks like the 20 is getting ready to cross the 50. So I think it'll be interesting to see what they do with beans. Technically, it's the weaker of the two between corn and soybeans right now. So I think that eyes will be on how it trades out today as we get a little bit closer to first notice day. Corn overnight down a couple, but corn is still one that we have really been for a prolonged period of time in a pretty defined range. So we'll see how that plays out as well. I think that corn is worth keeping an eye on how beans react in the delivery to see what, maybe a bellwether of things to come for corn.
Yeah, Justin, any thoughts there?
Yeah, I think I agree. I mean, corn has the demand right now. We're way ahead of last year export wise. I think on this last rally we kind of got back to par with, call it, the competitors on the export market. So I think we're kind of stuck in a range. I think we've got a big crop. We've got big demand. Without something changing, as we rally, we get uncompetitive. As we break, we keep breaking into demand. There's a lot of unsold bushels out there still. So I think that's going to cap, big rallies from here. And I could see us being kind of range bound to Ben's point. I think the interesting part's going to be when you look at like new crop prices, corn and beans. It's been well published. We've talked about it a lot. We're under the cost of production here, that can last for a period of time for sure. It'll be interesting to see what the markets do. Prices or costs have been really sticky. So how long are we going to stay under the cost of production? If South America proves another record type yield, it could prolong that pain, so to speak. But I'm just not that I'm not that bearish on corn prices, medium to long term. Soybeans, again, South America is such a big factor there on where we go. I don't think demand has picked up on this break for sure, but we have giant numbers written down for soybean demand. So we kind of have to see those type of numbers. So I'm kind of with Ben. I think technicals and fundamentals kind of tell the story that beans are just not as supportive as corn right now. I think once you get past this last third of harvest, I guess I think the playbook's kind of wide open for what could happen.
Very good. Anybody else had anything on the grain side this morning? Dustin, looks like maybe a couple thoughts.
No, just reiterating. I mean, this crude oil sell-off is pretty massive. So you have a huge headwind coming into the day. I mean, we started off really weak last night for that reason. And, all of it surrounding expectations for Middle Eastern tensions and what's happening between Iran and Israel. So pushing that December contract back down to $67 and falling, kind of breaking that recent trend line, that's something to watch for the day. I mean, if we close on the low, that's going to affect things like oil share. I mean, crush margins are really strong right now, $1.70 coming into the day. But just a tailwind to kind of keep in mind, or headwind rather.
Mm-hmm. Yeah, just back to the veg oil market. I know we talked about this a lot, but you look at like what palm oil prices have done. They went from a giant discount to soybean oil prices to, now they're a big premium. So I think the world veg oil market has turned, obviously it's taking a big hit today because of crude oil, but at some point, we fairly priced ourselves in the world market. So, that is I think a shining star, for the bean market. I just talked negatively about it. Obviously we have a lot of bean supplies out there, but we've opened some huge crush facilities here in the US. So we are building a really big demand base. So, probably puts, even more impetus on South American production, the next few months.
Oh, very good. We'll transition here quickly over to Ryland. Pretty neutral report on Friday. I mean, pretty much in line with expectation. Marketings, I think, were caught some people by surprise a little bit, but outside of that, nothing to really bat an eye at here.
Right. Yeah. I think overall, this one's kind of a dud, I would say, just as far as what the market was already anticipating. So on feed, just at 100%. Placements were just slightly above estimates, right at 98.1. So, and marketing's at 102. So I don't think this is going to change the current psychology. I think we're still just going to focus on the near-term factors. I mean, at least a kind of a shred of clarity this morning. McDonald's confirmed that the E. coli outbreak was not related to beef patties. So I think, we're kind of past that as well after last week overall. So, yeah, I mean, the managed money still wants to be long. They've been building big positions here in both the cattle and the hog market. They're long 90,000 contracts, and they, as of last Tuesday, had bought almost 5,000. So, I mean, they're continually adding here. Cash market's been red hot still. We're back up into the 190s, and I think everybody's kind of expecting that here to kind of stick this week. At this point, if we see another steady trade, but we are getting to that point where, we could kind of go either way. So I think it's just kind of a cautious environment, but I mean, there really isn't anything to set this back right now. We know demand's been very strong overall, and and margins have improved. Packer margins have come back in a big way with this rally in the beef. So overall, it just kind of feels like until something changes, there isn't, the downside risk seems to be pretty minimal at this point, which is always a scary thing to say because it always seems like there's a black swan around here for the cattle complex. But overall, I mean, the trade is actively supporting this rally here from a managed money standpoint. On the hog side of things, still holding up really well. We kind of closed pretty good on Friday, even though, cutout back up, cash back up. So overall, I think, everybody wanted to see if the cold storage report was going to put any kind of shed any kind of light on what's going on. And I think it did. Overall, I think the focus probably on the belly number just being down 31% for the previous month and down 40% from last year at, 17.8 million pounds. So like, it seems like we got tight belly stocks right now. And overall, I mean, the trade still wants to be long as far as managed money in the hog market. They're long 87,000 contracts, and they added 12,000 the previous week. So they're really supporting this rally. So overall, all good news here around the horn, I think, but I still think we're in a pretty cautious environment just because of the clock.
Very good. Appreciate the update there. One thing to note, we will have crop progress conditions out at 3:00 Central here this afternoon. We will talk about that in our nightly recap, in addition to visiting about that on the War Room tomorrow morning. So be sure to tune in. We appreciate everybody that tunes in on a daily basis, supports the show. Go ahead and throw us a like or subscribe. We certainly appreciate that. It'll keep you up to speed on everything AgYield and give you updates on when the shows are coming live there. So once again, thanks to everybody that reaches out and participates in the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.